Hey, welcome back. Eric Hatcher with Century 21. Looking forward to sharing this month's market update. We're going to briefly talk about a little bit about what happened in 2025, but spend most of the time on what most people want is what's going to be happening in 2026. And so excited to share some quotes and compiling everything from a lot of individuals and people out there. So let's dive right into it here. And so I wanted to share this a little bit. Some of this is national, some of this is kind of local. This is kind of the Auburn area kind of market update right here, just kind of keeping it local for a section of the market that I specialize in. That was interesting on the total homes that sold, including active and pending and listings per month over 2025. That you can see that we started off a little bit low and it just spiked. You almost had like a almost double of houses that actually came through in the June and July, and now you can see that we're dipping down. We're actually, what we've seen is actually this is the most what we call delisting, or people taking their homes off the market to rest them a little bit in a while. So this is going to be intriguing to see kind of what happens going forward here. So that was one. I liked the homes with price reductions. People, we're going to talk about affordability and things here, but you can see that there was a lot of people that were doing price reductions in June. It just was climbing, and then finally there's less price adjustments happening now. A, because there's less homes on the market, but then B is that the people that put their homes in the market in spring and everything in July thinking, oh, I'm going to get this total dollar amount, to that this dreaming dollar amount. So they just kind of, the expectation is they just didn't get it. So they had to actually do some price reduction. So I thought it was interesting in the Auburn market. But nationally, for wonderful news about interest rates is that they had been in the beginning of January like little over 7%, and now we are down, into the right around the 6.16 range, which is wonderful. So that's a huge difference, guys. You can see that a lot of people have been saying, "Hey, I'm going to wait for the interest rates to go down." Somebody told me that yesterday. Well, guess what? They have come down. I'm going to share what some individuals and professionals think that is going to happen to the interest rates as we kind of go through. But I want to share briefly here that I thought it was interesting. The other question that people always ask me, or thought process, is that, hey, when is the market going to crash? When are the what's going to happen for when am I going to be able to purchase a property and it's going to be less money? So wanted to share with here on this. It really didn't happen. You can see that 0.06 in California, and this is towards the end of 2025. So the numbers in the beginning of 2026 have not come out, but right now the national average is about 2.3%. Is about kind of where where levels have gone up. I think that Illinois, shout out to them. I think just by a quick glance, it looks like that is the highest upswing that we've had in around. Even Hawaii even went up 3.5%. So keep that in mind. Prices have not dropped, maybe yes, because people were reducing their prices because they kind of, what I would classify as, had an inflated desire of value of their home, and seeing if a buyer would come through. But I wanted to share a little bit about what's happening post pandemic. You had 2017, 18, 19. You can see that the inventory was floating kind of around in this direction. White is 2025. And so we are now finally getting to classified maybe as more of a healthy market with the more inventory. So, back in 2020, in 2021, had a low amount of inventory that really caused the price, supply demand, and it increased prices. And I'm going to show you here shortly a crazy amount. And so here we're getting to more of a balanced kind of market. So 2026 forecast, steadier and stronger, as Realtor.com states. In 2026, we expect a housing market that's steadier, but not yet off to the races. We anticipate affordability will improve modestly on average in 2026. This results from our expectations of slightly lower interest rates, only modest increases in home prices, and more balanced market than in recent years, says the senior economist from Realtor.com. So I want to talk about three things here that people kind of wait for or understand what kind of drives maybe some buyers in purchasing. It's rates, prices, and wages. Those are your three things. The rates are up high, prices could be lower, higher. Maybe in the last couple of years, prices were high, rates were high, wages are low. So that is not an affordability opportunity for a lot of buyers to be able to have. So what we're seeing here, and I'm going to show you in 2020, end of 2025 and coming into 2026, that all three of these are coming in line, that I believe you're going to be happier and healthier market for the buyers that are maybe sitting on the fence waiting for rates to come down. Check, that's done. Prices to kind of come down and stabilize. Check, that's done. And wages, hope that that we get those stronger. But I'll show you what's happened to affordability, where wages now have caught up a little bit there too. Expect a modest decline in mortgage rates. This is what the Fannie Mae MBA forecast, Wells Fargo forecast. Here are their numbers over here. They're thinking. So people again continue to say, well, I'm going to wait till the rates go back down to 2 or 3. They're just not going to do that. It's just not going to happen. That's kind of what got us into this kind of influx of issues and problems with affordability in the first place, with the supply demand. So being around the 6% in a nice healthy market is where they're feeling all the way to Q4. On that is where they're feeling that we'll still kind of hang around that 6%. And so on the moderate home price increase here, as you can see, the average is 1.16. But National Association of Realtors think there's going to be appreciation in value of homes up to 4%, 1.3, down to 1 to half, if you can go through and pick out your favorite person that you guys follow. But all we know is that there's an average of 1.6%, which kind of flows into maybe what was happening last year as well. So keep that in mind, that getting into real estate at any time, even if you can make 1.6, make 2% the next year, 2% the next year, then it's just going to continue going up and up. Even though home prices are expected to go up, affordability is set to improve modestly in 2026. And this is kind of one of my favorite graphs today to show you, that you can see in 2020 and 2021 that the home price growth up to 16% increase in values was just crazy, but left our wages in the dust. So we just could not afford where the prices were skyrocketing to. So now coming on the other side of that, you can see that we've got home price growth is that moderate little bit 1%, 2% range, and our wages now are raised and they're higher, but then they have the opportunity to have that stability of the wages helping the affordability of being able to purchase a home. So I love that slide right there. So Daniel Hale, for chief economist from Realtor.com, shares that after a challenging period for buyers, sellers, and renters, 2026 should offer a welcome, if modest, step forward in a healthier housing market. Incomes climbing faster than inflation as mortgage rates steady at a lower level creates space for affordability to improve. Because you can see the inventory for the rise in 2026, you can see that the average is about 10%. So we should have another 10% increase, getting back up to that normal inventory, which then will actually have a balanced market between buyers and sellers. And then Rick, from a founder of CEO at JC Patrick Company, he shares with us, inventory will continue to increase, though at least partly due to the pace of the sales slowing down and some older homeowners deciding it's time to downsize. And we've shared this in previous videos of the silver tsunami of the certain age category of individuals right now, that those individuals are going to directly affect what happens in the real estate market by bringing their inventory. They're the ones that are retired, have a larger home. They need to downsize. They need to move closer to family. They might have health issues. Their retirement isn't quite what they want. They're going to be selling their homes, and that's going to drive and get that inventory healthy again where we need it to be. And that's what is good as well. So Lawrence, the chief economist at NER, says in 2026, we expect higher inventory, modest improvements in affordability, and more accommodating monetary policy from the Federal Reserve will help the Americans buy, or more Americans buy, their next home. So I'm seeing that already. We've closed several homes in 2025 for first-time home buyers and I'm also seeing, and we're out showing current first-time home buyers because they see this as an opportunity because of where the interest rates are. So when you look at this number in 2024 this is how many homes that had sold in the nation. Not very much difference here. The projection numbers haven't come all the way out yet, but you can see in 2026 they're expecting to have more sales, not quite where we were at the pre-pandemic levels, but you can see this right here. This number was the lowest it's been since 1995, but we had millions and millions and millions of more people in the United States since 1975. So traditionally, it probably was the slowest when it talks to quantity of homes, the quantity of people based in the United States. So this is a nice, modest upswing for the forecast for that. So guys, thank you so very much for watching. If you have any questions about any other local markets that I share or service, I'd love to be an agent of choice. So if you're looking to buy or sell, rent, invest, whatever it might be, I would love to be an agent of your choice. Eric Hatch with Century 21. Please don't keep me a secret. Refer me to all your friends and family, and we'll talk soon. Take care.